Howdy, howdy, and welcome back to Fi Friday Feedback. This is a Friday episode of the Fi Guys podcast, and we're glad to have you here. Chris, welcome in, welcome in. I'm excited to get into it. Today's topic, we're talking a little bit about insurance today, but we're going to make it interesting. We're going to make it fun. And again, this is a recap of Monday's episode. So if you haven't listened to Monday's episode and you want all the juicy details with a little bit of an entertaining twist, I highly recommend going back and taking a listen to that. With that being said, let's start off with one of the craziest things I heard from Monday's episode. Apparently, there is an insurance company out there that insured J-Lo's butt for $27 million. What is that about? Explain to me this, Chris. What is going on with that?
Yeah, so that's actually not even an insurance company. They're more of an investor group. They're called the
Okay.
Lloyd's of London. But yeah, they've historically and very famously, they've insured Kim Kardashian's butt, J-Lo's butt, David Beckham's leg, Heidi Klum's leg, I think something else. They'll kind of insure anything. And the reason I brought that up on Monday's podcast wasn't to tell you that you should go and insure your legs or any body parts in specific. It was more to say that just because you can insure things, it doesn't mean that you have to insure things. And that's where being versed in finance and being able to understand the way broadly really helps you. Because one of the biggest things that I really wanted people to understand on Monday's podcast was insurance doesn't matter if you don't understand what you have. Because even if you get into an accident and you don't know that you have these coverages, it's not like the insurance company's gonna be like, hey, good news, you have all these coverages that we definitely want to give you more money for. You have to understand what you have and be able to fight for yourself. And if you can't fight for yourself, you need to get an attorney who can fight for you. And that's kind of the whole ethos of most of the things we talk here about the Fi Guys is you have to be the hero of your own story. You can't go through this life hoping that people are going to rescue you, hoping that the insurance company out of their good graces are going to fix your problems, hoping that insurance is going to make you rich and that this salesperson doesn't have any perverse incentives and wants to sell you this insurance product, which he's trying to tout as an investment product because it's better than the market. It's better than other ways that are there and provable to you to be able to make money. You need to know this thing enough to not hyper focus in one thing to completely miss the bigger picture.
Absolutely. Absolutely. And the types of insurance that we talked about on Monday that we thought were worth considering, right? If you listen, hey, this is a test. If you listen to Mondays, you'll know what I'm about to say, right? We talked a little bit about homeowners insurance, renters insurance, auto insurance. It's one of the ones that actually in your state you might have to actually have it, right? Unlike for some reason health insurance, right? You don't legally have to have health insurance. But for auto, you actually do have to have it, correct, Chris?
Yeah, you have to have a liability insurance, meaning that you cover the person that you hit. You don't have to have comprehensive, which covers you, but you do have to have liability for who you hit. But the limits are very, very low in most states. I
Gotcha.
think most of them are like $20,000 to $25,000, which in a car accident goes really fast.
Absolutely. We also talked from homeowners, renters, auto, health, disability, long-term care, life, and umbrella. If you don't know which ones I'm talking about, I'd head over to Mondays. But yeah, those were the most common ones. Like you said earlier, you probably shouldn't be, getting insurance on any limbs or body parts or anything like that. I mean, I'm sure you guys have a wonderful $1 million smile, no doubt about that. But why would somebody get insurance, Chris? What's the purpose of that?
Well, I mean, insurance is there to protect risk. It's there to control risk. And that's the reason it's called risk mitigation. I know when people like they hear that term thrown around in finance, like risk mitigation, that sounds sexy and fun. Like, let's talk about that. And then your person you're talking with is like, all right, let's talk about insurance. Like, no, I want to talk about risk mitigation. It's like, yeah, that is insurance. Like this is what this is. I actually remember a time, Dominic, that you and we were starting out this podcast and I was asking you for suggestions. And this was back when you didn't know a lot of much as you learned over the hundreds of episodes we've done. You're like, I want to do one on risk mitigation. And I was like, okay, cool. We'll do one on insurance. You're like, no. I want to do it on risk mitigation. And I was like, I don't think you understand what that word means.
It's humbling learning so publicly. It's great. It's great because I'll go back to those episodes. I'm like, man, this guy first sucks. But no, it's interesting. You're 100% right. Insurance is probably the least sexy thing. I don't know. Taxes, it might give it a run for its money. I don't know which one's more unsexy, taxes or risk mitigation. But yeah, no, I mean, we talked a little bit about that maybe term insurance, while we love it, it's awesome. 90 to 95% of it doesn't actually pay out, right? And that's not something where it's like, I died, where's my money? It's like, no, most people outlive the policy, so they are living, right? It'd probably be a mistake, right, Chris, if I got a policy and it was like 90 to 95% of people were getting cashed out. Like, man, something about this policy, man, it's bad luck. It's like it's a 10-year term and everyone's dying within the 10 years. Kind of
There's
sketchy.
something I want to discuss too, because I did
Okay.
mention that, right? And I saw in the comments that people were kind of like, "Well, why would I buy a policy that I'm never going to get out?" And I understand that. I
Agreed.
definitely do. But I've never paid for my car insurance policy and then at the end of the year be like, I'm going to go get in a car crash to make sure that I use this up. Like, I'm going to burn down my house to make sure that I'm not paying for this thing for no reason. And when people think of like whole life policy, they're like, Chris, I want to make sure if I'm paying into this policy that it's going to be a guaranteed payout. Like, I only want to guarantee this in life. I'm here to say that there are no guarantees in life. Life is messy. Life is what it is. And here's the really dirty secret. And I don't know the statistic on it per se. Maybe Dominic can look it up on our young Jamie ChatGPT, but majority of whole life policies are not paid out either. And I don't know the exact amount, but the reason they're not paid out is because that policy, that premium that you have to pay, it increases over your lifetime. As you get closer to death, most policies will increase. There are some that are set at the beginning of life and you have a standard policy, but most people, as you approach your deathbed, run out of money. And as you're running out of money and you're trying to decide, do I pay the life insurance or do I pay the medical bills? Most people pay the medical bills to extend life. And that means that the coverage is often dropped before the eventual inevitability of the person dying. In fact, life insurance ends at 100. You can't be insured for a whole life policy after 100. So you can outlive life insurance. And then, yeah, you'll get your cash value back, but everything you built for, because you live too long, goes away.
I did not know that you can outlive your policy in that regard. It's only to 100. Damn, well, that's interesting. That's interesting. But yeah, I looked it up. Roughly 4 to 6% of whole life policies never pay out because the policy lapses and the owners unfortunately stop paying the premiums. But if the policy stays active, it will pay out.
Mhm.
So that's an interesting. That's not a small number. That's a very large number.
Yep, about half. Yeah, so we talked a lot about that, and then so we talked the difference between whole life and term insurance. And if you don't understand what I mean, you can go back and listen. But I just want to make sure that our audience members know that there is no solutions here. There are only trade-offs. And the reason that we recommend what we recommend, which is invest in term when you have dependents on you and invest the difference into a broad market index or into whatever way you decide to invest, is it gives you optionality. And I think too many people, they go through life thinking that insurance is an investment. And insurance is just that. It is insurance. It is there to protect against the worst, not to make you rich. It makes you whole, not rich. And that stands for life insurance. That stands for umbrella insurance. It stands for annuities. I've worked in places where people were willing to sell annuities to people that weren't ready for it, that shouldn't have had it. People that were in their 80s getting money locked up for the next 15 years, which is just disgusting. And know that there are people out there that are willing to do what is in the worst interest of other people at the best interest of themselves. So you need to understand these types of things, because things like life insurance, that's to protect you in case you die early. Things like annuities are there to protect you in case you live too long and outlive your money. But that's what it is. It's insurance. It's not there to grow your money. It's not an investment. There are investment components of an insurance. Components, but that does not mean the entire thing is an investment. It's like fingers and thumbs. I have one thumb. And yes, my thumb is a finger, but that does not mean that all of my fingers are thumbs. Same thing with our insurance. Yes, it has some investment components. That does not mean the entire thing is an investment. Only a small aspect of it is. The rest of it is insurance. You have to understand that insurance is there to make you whole, not to make you rich.
And it's so important also to not only just to have insurance, but to know what you have and know how it works. This quote you said from Monday's episode that I absolutely love: insurance only works if you know what you have. Couldn't agree more. Couldn't agree more. And I love that. Um, I think it's one of those things where you have to educate. You don't have to be, 10 layers deep on insurance and know everything about it, right? but a general knowledge can take you way further than you think, way further. And that's what you want to be in every area of your life, right? And we talk a lot about really everything in finance, but for today's episode, insurance, it's so important because one bad accident, one car crash, one insane medical situation, or some dramatic thing in your life, I mean, it can wipe out decades of progress. Right, Chris?
Yeah, no, I mean it's scary how long it takes to build a city and how quick it is to destroy it.
Yeah. Gosh, isn't that the truth?
And then we also talked about we closed the podcast with just a brief overview as to estate planning and legacy planning. We're not going to go super deep into that. I recommend that our listeners go and listen to episode 47 of the Five Guys podcast. We really discussed the importance of setting up a will or a trust or just some sort of a legacy document that tells your loved ones, hey, if I pass away, this is where the money is. This is the accounts. This is the passwords. This is the information. These are my insurances. This is all this stuff, because even between you and your spouse, who knows you probably better than most people, they don't know they probably don't know your passwords. They don't know all these things. And you don't want them to have to do face unlock on your phone after you pass away.
Oh no, that's
Like,
horrible.
it is horrible. I understand that. And it's not even going to work because the thing reads off of a facial heat. So it doesn't really even work anyways. Yeah,
I did not know that.
That's outside the scope of finance. That's just
That's insane.
general knowledge that I know.
Yeah, that's so you recommend having a digital kind of an archive. What would you call, like a USB or a hard drive with
Yeah, I
sensitive
call it a
information?
legacy document, and that's what I have. It's a USB and it's in a fireproof safe and it's there and it has a lot of information. I update it once a year, and that's a place to start. It's not a will. It's not a trust. There are ways to step this up and to make sure that you're better off. But if you're the person who's listening to this, you're like, oh, I don't have any of this stuff. And I'm really afraid to look at a will and I'm afraid to call an estate attorney to talk about a trust because, yeah, it's expensive. And go listen to episode 47. We talk about ways to reduce the costs. Like, that is there for you. It's scary, but you need to set up something. And at least getting that little bit of getting better might push you to understand where your money is, so that if you do decide, I want to do a trust or I want to do a will, depending on your state, whatever is going to be best for you and depending on your assets. Because the messed up part is when someone asks, should I do a will or a trust? What should I do? It depends. I don't know what you have. It always depends. That's why I'm saying that you need to at least get started to figure out, what does it depend on? And how am I going to figure it out without you getting started? Without asking questions. And how are you going to figure out, more importantly, not me, because it's your life. You need to be the hero.
100%. And that's really that's really the broad kind of idea about this podcast is we're just the guides on your journey. We're trying to make it so you are the hero of your own story. You take control of your life. So many times in life, you want to be led. You want it to be done for you. And I wish that was the case, right? I wish I had a magic genie and I'm like, yo, I just want it done. Best solution, I trust you, right? But unfortunately, we don't live in that world and we have to be playing with the cards we're dealt. And the cards that we're dealt is we have to be the hero of our own story. There can be guides, there can be villains, there can be all sorts of stuff, but only you can be the hero of your own story. So please take charge today and really, really take control of your life, both financially, but be who you need to be who you dream to be who you want to be, right? Nobody is going to stop you. With that being said, Chris, do you have any final thoughts on Monday's episode, on the recap?
No, I mean, I hope that you followed the action steps. If you don't know what that is, go back and listen to Monday's episode. But the biggest thing I want our audience to understand is that insurance is there to make you whole, to get you back to where you were before the accident or before the event. It's not to make you rich. There are many stories out there of people who made a lot of money after something happened and they paid a price. And just because it wasn't a monetary price, well, this person's so lucky they can't walk anymore, but at least they have $1 million. That's not something that I'm willing to trade off for. You're not supposed to get rich off insurance. And if you're using it as a get rich quick scheme or as a way to invest for your future, like Dominic said, 40 to 60% don't end up getting paid out in the long run. And that's pretty atrocious. That's a terrible investment track record. Yeah. So why not invest in the things that are known and have worked for generations rather than these small schemes. And yeah, we could talk about waterfall trust. We can talk about life insurance policies that renew themselves. Those things are available to you. But if you're listening to this podcast and you're trying to figure out your money mindset, you're trying to figure out how can I get there, you're not there yet to even worry about it. There are many pieces you need to get to before you're talking about using a whole life policy for its cash value to buy rental properties. That's very far from where you are right now. So don't put the cart before the horse, and understand the way broadly enough to know when you're being misled.
100%. With that being said, guys, we're going to be moving on to our Friday feedback viewer mailbag. So let's get into it. For this week's letter, the header is, how extreme should I go with paying off debt? Do I have to be miserable for years, or can I still enjoy a little bit of life? Well, this is going to be an interesting one. Let's get into it. Howdy, Fi Guys. I've been on this relentless journey to wipe out my debt over the past couple years. I'm approaching 30 next year, and I've set my sights on financial freedom, but it comes at a cost, of course. A big cost to my happiness and my sense of fulfillment. Gotcha. I used to be all about cars, working on them, customizing them, but that's all on hold now. Even my DIY projects, which used to bring me so much joy, have taken a back seat as I tighten the purse's strings to pay off debt faster. Sacrificing these passions have left me feeling empty, despite my financial progress. I tried to replace these activities with hiking, thinking it's a cost-effective way, but my ADHD brain struggles to find peace in a slow pace. Now I'm eyeing mountain biking for a quicker thrill, but I can't help but wonder if I'm pushing too hard. Should I allow myself a monthly hobby allowance, or is it better just to endure this feeling of deprivation for another year or two? Sure, I see the light at the end of the tunnel the day I finally clear all my debt, but will it bring me the euphoria I imagine, or will it merely be a sigh of relief? The nagging fear persists. What if life throws me a curveball and I'm diagnosed with some terminal disease? Would these years of financial strain would have been worth it? Or could I have spent them living my best life? I'm stuck in the limbo of financial responsibility and personal satisfaction. The struggle is real, and I can't shake the feeling that I might be missing out on life while chasing financial security. From debt or delight, trying to do life right.
Dominic, I always think whenever I hear these questions is everyone kind of goes either or. It's either I hate my life and pay off the debt, or I love my life and don't pay off the debt. And
Yeah.
I feel bad that oftentimes whenever we do this, it's like yes and yes. You need to do both simultaneously. Like two things can be true at the exact same time. And I know that our brains don't like that because it's cognitively a deficit to have to run two simultaneous competing ideas, but that's the way that life normally works. It's somewhere in the messy middle. It's not extremes either way.
And that's life, right? That's life. I mean, sure, we can dial it up and go all the way to one side, all the way to the other side, right? But usually that's the wrong way. Usually it's not the absolute way where it's like, all right, unless we're in a really dire situation, right?
Yeah, that's survival. Those are two different. It's kind of like politics right here in America,
Yep.
where it's like, I'm going to give you 4 years to this side. Oh, no, you messed it up. I'm going to the exact opposite side for 4 years. Oh, you messed it up. And like, we need to find a way to divert ourselves back to the middle, because I've said it a lot on this podcast. I'm going to say it again. If you're going through this journey of financial independence and you are not enjoying any part of the process, you have the ability to change the process. There should be no point of this where you're like depriving yourself, where you're not living life, because this person is absolutely right. You could die tomorrow. And how do we live for today and plan for tomorrow simultaneously? That's the balance. That's the Tao. That's like everything that we're talking about and trying to figure out, like, how do you do that? And that's why there are no solutions, only trade-offs. Everyone gets to choose their own solution.
Yep, that's true. That's true. And life's about trade-offs. Life is about trade-offs. And sometimes, excuse me, sometimes there's decisions we make in life where we can come back. We walk through the door, we can come back through that door and choose a different door, right? But sometimes in life, you walk through a door and you can't turn back. And you have to now live with that decision.
Yeah.
Yes, you're correct. You could get a terminal illness. It could be, you might have a year or two left. Honestly, I don't know. I might have a year or two left. Chris might have a year or two left. Who knows? Or we might live another 100 years. There might be a huge medical advancement and we might live to be 130. Who knows?
Yeah, I hear that all the time. Like, why would I want to save for my future when I could die tomorrow? It's like, yes, that's true. And statistically, you won't. Statistically, you'll be in your 80s working as a greeter somewhere or living on the streets. And I think it's better to just put a little bit of effort in now and live both things simultaneously. So, to our listener or to our writer, first off, I hear you. Debt can feel like a heavy cloud hanging over your life, and it's completely normal to be drained by it. It's even normal to feel trapped by it while you're paying it down. Your feelings like aren't wrong in any way, shape, or form. That's completely normal. I've gone through debt payments. My wife has. Dominic has. We all have. And yeah, it sucks. And you make it through it. Because debt repayment does not equal joy suppression. I don't know where this thought comes in your head of like, it's either this or this. But paying off debt is important. And it doesn't mean that your hobbies and your passions have to vanish completely in order for you to pay off your debt. You're not just a number on a spreadsheet. You're a human that needs to feel like they're thriving and growing to be able to stay on the path and continue to move forward. So I really like your idea of setting like a hobby budget. I don't care if it's $50 or $100 a month to do something that lights you up. Because if it lights you up and it's serving you, it isn't a waste of money. It's investing in your mental health and your stability, because debt burnout is real. And I've seen people go through it. And even small little doses of joy can keep you from burning out entirely and basically destroying your whole debt payment plan and resetting yourself way farther back. So this really isn't even a math problem. It's a mindset problem. And the nice thing is we can reframe your mindset around progress. Instead of thinking as a debt repayment as a punishment, see it as clearing your way for your life to be able to expand. The faster you finish, the sooner you can fully enjoy your passions. But you don't need to pause living until it's completely gone. You can do both together. So I want you to experiment with low-cost alternatives that actually excite you. For me, I like to do hiking. Like, I understand that hiking didn't click for you, and that's okay. Mountain biking, like DIY project in small chunks. Be a scientist in your own life. Test things. See what that I like and don't like. Yeah, cars used to be your hobby, and now because of the budget, I can't do that entirely. Okay, can I play a video game that is like that has to do with it or something? I don't have ADHD, so I can't really talk to that part. And that doesn't mean that ADHD and slow hobbies don't mix, because they do. You just need to be engaged in it. I know people that are ADHD and they can sit down and they can focus on dinosaurs or on whatever it is, or the astronomy or whatever it is that's important to them. You need to find something that's dopamine friendly, ways to feel like you're making accomplishments. Short, high intensity projects often work better than these slow meditative ones. And that's okay. Everyone's a little bit different. So I want you to think in terms of phases. Because right now your brain is putting this into forever. You don't have to live a life of deprivation forever. You get to pick small sustainable joys each month and treat your debt repayment like it's a timeline, not a life sentence. Because we need to consider the bigger picture here. And this isn't just for our listener, this is for everyone. Your fear of something happening in life while you're focusing solely on your money is completely valid. But life is unpredictable. And striking a balance between responsibility and enjoyment is key. And this is where there are no solutions or only trade-offs. So you need to celebrate your small wins. Every dollar that you put towards paying off that debt is progress. And each small moment you allow yourself to enjoy is a win. And both of those matters. Because while this is a financial podcast, your mental health is a non-negotiable. Feeling depressed or trapped isn't just like part of the plan. You need to prioritize your emotional well-being alongside your financial goals, because it's the most important part of living your life on your own terms. Dominic and I can't tell you the answer. Your mom and dad can't tell you the answer. No financial professional who you pay is going to tell you the right answer. They'll tell you their answer, their journey. But you have to see, are you willing to live that journey too?
Couldn't agree more. I think that's valuable advice. You know, life should be lived. And just because we're in a bad situation doesn't mean that it can't be lived. We just got to find new ways to live. And I love what you're saying, Chris. And from the Five Guys, we wish you the best of luck. We truly do. With that being said, we're going to move on to win of the week. I'm going to start off with my win of the week. My win of the week is that I booked a trip to Minnesota, and I'm very excited about it. Very, very excited. I haven't been there in over a year, so I'm due to come back. For me, that place is like the great reset for me. There's not a lot of internet. There's a bunch of trees, great weather, and it allows me to just think. And everything is so damn spread out, right? So when I land in Minneapolis, I got to drive like 4 hours north. So it's going to be a nice little trip, a drive. So I'm excited. I'm very excited, but that is my win of the week. But Chris, what do you got for your win of the week?
So I have two, actually. Last week, one of my wins of the week was that I called my cell phone coverage and my internet provider and got some discounts and stuff. Well, this week I actually moved from my original cell phone provider to Visible. And basically, rather than I'm saving more than half the amount of money for the same level of coverage that I had before. So Visible plan for the Visible Plus was on sale for the time it is of the year. It was only $30 for the next year, a month,
Nice.
which is more than half of what I was paying on my other provider. So that is a cool win. And the other win is that I've always snored for a long time, and my wife always complains about it. And I've tried different things. So I finally invested in mouth tape. I just got it on Amazon, and my wife is saying that I'm not snoring anymore. So it's very nice. And I'm getting to sleep through the night a little bit better. So mouth tape, it's very simple. You look like someone kidnapped you and threw a piece of duct tape on you, and you look like a crazy person, but my wife says it's working out. So I'm going to keep it going.
Hey, as long as the wife's happy, right? That's awesome. And sleep is so important. You got to have good sleep. So that's awesome. I've always seen videos of like mouth. I've heard another one's called like hostage tape.
Yep.
So I'm glad to hear that works for you. I might have to try that myself. I've noticed I've kind of been snoring a little bit too, which is weird for me. I never used to snore, but yeah, I'm glad to hear that works out for you. You gonna wear a ski mask to complete the ensemble at night, or like just keep it?
Oh no, I'm just gonna tie myself up, and then just sit in the corner and cry.
There you go. Well, guys, that's our win of the week. If you have a win of the week, drop it in the comments down below. We're the Five Guys. We loved having you here. If you would like to give us a like, highly appreciate that. If you like to follow, much appreciate that even more. But more importantly, the most important thing is to take action on what we learned today, right? And if we're going to take action, might as well take action with a friend, right? So make sure to share the podcast with someone that you care about. With that being said, I'm Dom, he's Chris, and we'll see you next Monday.
Later.
Peace.
This video podcast is sponsored by Monzon Wealth. The content in this podcast is for informational purposes only and should not be considered financial advice. We do not endorse specific products or services. Past performance does not guarantee future results. The opinions expressed are those of the hosts and guests, not the podcast sponsor. It is crucial to consult with a qualified financial advisor or professional who can provide advice tailored to your specific needs before making any financial decisions, investments, or taking any other actions. If you are seeking specified help, you can reach out to Chris at monzonwealth.com.